The short answer is liquidity matters. It's the most important thing for investors. We haven't spoken about China yet, but China needs badly to goose its economy. We're moving into a new era.
Bitcoin just pushed, now above $31,000. And in fact, looking since the November lows, we're up near 100% in price. The bigger question today is what's next? What's next for Bitcoin? Well, we know that hash rate, meaning the strength of the underlying computer network, is at an all-time high. We know that regulators are warming up to this space.
If BlackRock all of a sudden has filed for a Bitcoin ETF that's not futures-based, it's spot Bitcoin,
right.
Okay?
I don't see how this changes.
If anybody can get it done, would you bet against BlackRock?
No.
You know, they're the behemoth.
But a much bigger factor that not many people are talking about is liquidity, global liquidity in the markets.
The short answer is liquidity matters. It's the most important thing for investors really to watch and track. The reason the market's gone up is very clearly to do with more liquidity, and that's the key factor. What is liquidity? Let me start by saying what it isn't. It's not a measure of interest rates. It's not conventional money supply. In terms of our definition, which is a long-standing definition that basically goes back to the time that I was at Salomon Brothers back probably two decades or more ago, it's looking at the flow of money through global financial markets. So it's the cash and credit that is available for purchase or investment in assets, and it's the key measure that drives asset prices.
So liquidity matters. And in a recent episode of Forward Guidance, awesome podcast, macro expert Michael Howell of Cross Border Capital said something really interesting.
Well, I think the answer is that we're in a liquidity cycle upturn. That liquidity cycle upturn will not be a straight line, but the next peak is likely to be 2026. And the point that we've been making is that after suffering a headwind, investors suffering a headwind over the last 18 months with liquidity being drained, what they're beginning to catch now is a tailwind, and that tailwind should last 2 to 3 years, if we're correct.
Meaning looking at global liquidity, meaning not just the Fed, but the European Central Bank, the Bank of Japan, People's Bank of China, Bank of England, etc. This rally, this uptick is far from over. And that's absolutely not to say that we won't have nasty pullbacks, that there won't be crashes. Everything is possible, especially in crypto. But in a direct quote from Michael Howell, he says, QE is coming back big time. Central banks have spent much of the last few months bailing out banks. What they're going to spend much of the next few years bailing out is governments.
There is this threat, as I pointed out, that central bank QE has to come back big time to basically repair government or fiscal finances. And that's the other thing you've got to start thinking about. In other words, we're moving into a new era. The COVID crisis was a watershed in many ways, but it was a watershed in terms of the policy decision of how government spending was funded. It was not funded by higher taxes, okay? That is unusual. It was funded entirely by issuing debt, and the central banks took that debt up.
So he's essentially saying that all that increased surplus of spending wasn't because we got more money from taxes like it would usually be done, but instead they printed so much money, the government took on debt, the central bank took on debt. But looking forward, we're about to see similar issues, and not because of COVID, but of other areas of government spending that we're going to need to keep up with.
It was funded entirely by issuing debt, and the central banks took that debt up. What we've got is a similar problem coming up because you've got another big spending program, which is being caused by effectively two things. One is aging demographics, which are forcing mandatory spending programs up. And you've also got the defense bill to pay. And if you look at CBO projections, Congressional Budget Office projections, they've got a relatively passive forecast or projection for defense spending. If you get back to Cold War levels, when America was spending at least 5% of GDP on defense, then you're starting to look at serious levels of debt issuance in the next 10 years, an average of $2 trillion a year, in fact. And the Federal Reserve will likely have to come in and take a large share of that debt issuance. In other words, the Fed balance sheet goes up.
And while Michael Howell's thesis is the Fed is going to be forced to print much more money, because how else are we going to pay for these programs? The bigger catalyst is global liquidity, especially in the East. People's Bank of China liquidity, and then the overall Asian markets.
It's going to increase because other central banks are going to be adding liquidity. We haven't spoken about China yet, but China needs badly to goose its economy. It's already had one go at it at the beginning of the year. It's cooled off, but it's going to do it again. They're going to have to do that. There's no question. There's no way out. With
the spigots are coming. The liquidity spigots are coming in China.
Yeah, it has to come simply because you can't sustain an economy, even a Chinese type economy with 20% youth unemployment. It just doesn't work. They're going to have to promote more growth, and I'm sure that's coming. We got the first inkling of it in the last few days anyway. And then you've got as well what's going on is a major capital shift towards Asian markets. Now, that's another factor which comes back to the cross-border flow element. Those cross-border flows into Asia will be monetized by the central banks. And that capital shift is evident, viz. The Japanese stock market. That's going up. We've got liquidity indicators, and there's some in the pack, which show the liquidity movement into Japan. And I can give you there's a chart reference if I can find it quickly. But basically what that's showing on page 17 is the Japanese liquidity cycle and the Nikkei 225 index. And basically that's showing why the Japanese market's going up. And if you believe that liquidity is going to continue to go up in Japan, then the market must rise pretty well. Warren Buffett's made a brilliant call here by shifting some of his funds into Japan, catching it around the bottom. Great call as always. But other markets are going to start to do the same. And so what we've got to start thinking about is the effect of these capital shifts.
And again, I am not a financial advisor, nor can I see the future. So do your own research. And the price action we're seeing for Bitcoin in the United States is interesting. Bitcoin's price has been trading at a premium on Coinbase relative to other exchanges since the BlackRock filing. This is likely US-based high net worth individuals and hedge funds front-running expected institutional flows.
Bitcoin is digital gold. It is taking the place of what gold did for 5,000 years, right? There's only one money in the world, that's gold. Money is an asset that exists in the absence of a liability. Gold has played that role. It sits at the base layer of currency. Currency backed by debt created by governments to facilitate commerce sits on top of money, gold. And for 5,000 years, gold's done a good job. But gold isn't portable and it's not divisible. Bitcoin, a permanent immutable ledger, does play that role as a base layer of new money going forward, and will build the future of finance on top of that.
And I will give you the full story because on this channel, I won't just share with you the bullish news. I'll share with you all the news so you can make the best decision for you. And breaking, BitGo has canceled their Prime Trust acquisition as users report frozen withdrawals. So crypto custodian BitGo announced that it was ending talks to acquire rival Prime Trust, ending the acquisition 2 weeks after it was announced. And the reason this is big news is because the speculation, and again, this has not been proven, but the speculation is that Prime Trust is insolvent. Around the same time BitGo made its announcement, social media users were sharing images of what appeared to be an email from Prime Trust to its customers. It announced a halt to all withdrawals for digital assets and fiat currencies. And the reason was, the message said the pause was a response to a cease and desist order Prime Trust received from financial regulators in Nevada. So in a direct quote from the Nevada regulators, Prime Trust has a shortfall of customer funds, as well as Prime Trust is operating at a substantial deficit, or even may be insolvent, the order said. This is obviously an ongoing story. Like always, I will keep you updated. And for those of you that want to join us for a festival in Portugal next month, use code ALTCOINDAILY50 for 50% off your tickets. Link down below.